Are you making losses in the market, or you are not really sure about how to identify the bias of the market from the higher time frames? This video is going to be for you because I'm going to teach you the basics of market structure, and I'm sure you've seen countless of videos out there on the internet about market structure, and you probably have everything figured out, but you still can't break that code to understand how exactly do I determine market structure. Okay, now I am one person who deals with the 4-hour time frame. I love trading from the 4-hour time frame. It gives me, an advantage to know what's going to happen during the whole week, and I can also swing my trades through 2 weeks or 1 week, 3 days, 5 days, depending on whatever the market structure is bringing for me. So if you're also struggling maybe with top-down analysis, you look at the daily time frame and you're like, what is going on? I have no idea and I don't know what to do. This video is going to be for you, and I want you to sit back, relax, because this is going to definitely help you. And again, this applies to anything that you trade, be it volatilities, be it indices, any type of trading that you can do. This video is just for you. All right, now let's get into it. So you want to know where the market is going. You have no idea. Once again, what I want you to do, okay? Let's say you counted levels, your levels are not clear, or they are clear, but you still need that extra or edge or advantage or confirmation for you to say, yes, definitely the market is going in this direction. So this is what you need to do. All right. So go to the 4-hour time frame, and from the 4-hour time frame, all right, I'm just going to show you how the market actually moves. Okay, so this is what we call the market structure. Now, if I show you from the whiteboard, right, the market structure moves in such a way whereby it prints out the low, okay, and then it moves up, comes back into the range, moves up, comes back into the range, moves up, comes back into the range, and it keeps on doing the same thing. Sometimes it can even come back to test the low and go up and do that exact same thing until it gets to a point where it has decided that now it actually wants to move in a different direction. I'm sure you have seen this countless times. Now, this is what I'm going to show you, okay? So when we talk about a range, we are referring to this high and this low. That is what we call a range. That is what we refer to as levels in market maker cycling. So when we say the market is trading into the range, we are talking about that pullback which you see there coming back within this high and that low. All right, now for you to know the direction of the market, every time a market is moving into a certain direction, it always prints out higher highs and higher lows. If it's a downtrend, it will print out lower highs and lower lows. All right, so what you want to pay attention to is, when was the last time a low or a high was broken? Okay, so in this particular case, the last time a high or a low was broken was right here. So this means this is the peak formation. All right, so this becomes your peak formation or the turning point of price, because that is where the last known high or low was broken. So in this case, the market was actually coming from this direction. All right, so it was printing a lower high, and it printed a lower high there, and it printed a lower low there. All right, and then what happened was the market then came down and failed to take out this lower low, all right? It failed to take it out, or maybe it took it out, still okay. Sometimes it does take it out, sometimes it fails to take it out, all right? And then it pushes up. So what does it do? When it gets to this point, we're expecting the market to respect and print a new lower low. However, the market breaks that high and closes above it. Now that means whatever we see up there is a new higher high, all right? So that means the market broke out and closed above it. So it formed a new high. So that becomes a new higher high. Immediately when you see something like this, what you wanna do is wait for the market to come back into the range, all right? Wait for the market to come back into the range, and then you can find your setups into the range, or whether it wants to test the low, whatever. Now you can then start counting levels and all that. But at the back of your mind, you know that your market is bullish, all right? You know that your market is bullish. So you are looking for buy setups, all right? And then you trade away from the peak formation until the market forms a new higher high, right? So you are on the trade, or maybe you got out and you want to look for a new entry. So the market forms a higher high, then the market trades back into the range. So it doesn't matter whether the market comes back to the low, as long as it does not break this low and close below it, then it is still an uptrend. So this thing repeats itself to a point where it comes to right here, where it forms, say this is a higher low, right? And this is a higher high. And then when it gets here, it then forms a new higher high, and then it comes back down and it forms the last higher low. And most probably, maybe let's say this is a higher high again, maybe it extended further, and then it comes back down and it breaks the higher low, the last non-higher low. Now that means the market is now bearish. So that's all about market structure, all right? And I'm pretty sure you've seen this in so many videos. Now, how do I use this then to swing my trades? I'm going to show you on the charts, because I want you to understand that this is the very same concept that you can use on anything. Please stop trying to catch peak formations, the turning points of the market. Yes, it's possible to do that. I've done it several times, but you may not win all of them all the time. You can't win all of them on the peak formations. Sometimes they stay there for a long time, which it becomes hard for you then to determine what exactly is happening in the market. So it is very easier for you to let the market print out. You want to see the market print out that those higher highs, and you want to see the market take out the last low while you're on the sidelines. And as soon as that happens, then you start to look for setups from the lower high. You start to look for setups from the lower high going down. Sometimes that lower high is also still in the same range there, but the good thing is you already know that you've got a failed swing, you've got a broken low, then you know the market is on a downtrend. And like I said, you want to see a candle close below that low. Anything about a week, don't trust it. You want to see the candle close below that low. All right, so this is how you can easily identify the market structure. Okay, I'm not going to dwell too much on it because you guys already have seen too many videos about this. Now, let's come back to the chart. Let's say this is the chart and you're on the 4-hour time frame and you want to trade, all right? So the first thing that you have seen here on the 4-hour time frame is that the market was on a downtrend, all right? So the market was on a downtrend, all right? Now you want to trade, okay? So what you have seen a higher high and you have seen a lower high. So you have seen a higher low, okay? Now, do you realize that when the market came down at this point, it did not take out the higher low? It actually respected it and they closed above it. So that means at this point, you do not have a bearish market. It is still a bullish market. So wait for the market to take out those lows. Now, let me repeat this. It's not like you are supposed to trade every single move that happens in the market. If you want your trading to be clean and if you want to win in the market, be very selective. Don't trade everything, okay? Allow the market to move, allow the market to show you the direction, and then you can take the trade from there. Now, look at this. After the market has taken out those lows, now that means we know the market is bearish. So what we then wait for is the market to trade back into the range. So our range is this low and that high. All right, so we want the market to trade back into the range, give us a setup, and then we can go short. And we probably are not going to exit the trade until we see the market break the last non-high. All right, I don't know if this is clear, guys. Okay, now look at this. When the market gets here, it forms a low. All right, so you've got a lower low, and then it forms the last lower high, and then after forming the last lower high, right? So this is your lower low and this is your lower high. The market comes back and respects the lower low, all right? And then the market rallies up and breaks the last lower high. So what happens now? Because you're on the 4-hour time frame, your market is now bullish, okay? So the market trades back into the range and you take a buy, all right? Now you hold the market and the market rallies up and closes over there, all right? So you now have a higher high, okay? Now the market then trades back into the range where you entered and the last high. Now notice how he trades halfway, which is 50%. And then what he does is he quickly goes up and he makes sure he takes out that high until he forms a high over there. And then he trades right back and forms a low right there, and then trades right up and forms a high right there. Notice what's happening here. A low right there, up, a high right there. So the market keeps on printing highs and lows, highs and lows. So it is not taking out any lows. So you can see here again, a low, and you can see finally the market goes up and shows you the last higher high. Now the market comes back down and prints a lower low, all right? Sorry, a higher low, all right? The market comes back up and prints a higher high. You can call this a higher high or a lower high, it doesn't matter. But what you're watching for now, because you want to see the market go bearish, you want to see if they will break the low. Now notice what happens. Then the market comes back down, does not take out the higher low, but instead creates a new higher low, okay? So the market creates a new higher low, and then the market goes up for a higher high. So at this point, the market is still bullish, okay? So they actually even broke the high there, the last higher high. So that tells you the market is still bullish, all right? The market will only be bearish if this low gets taken out, all right? Now, then you probably are now waiting for sell setups and you can't find sell setups. Then the market comes down aggressively, breaks the low, continues going down until it reaches right there, all right? Right here, it forms a lower low. Now, because the market has formed a lower low, you now have a new range. So you want to see the market trade right back into the range, then you can look for shorts, okay? You want to see the market trade into the range, then you can look for shorts. Now, in the middle of the same cycle, you can see the market prints new cycles altogether. So you can see right there. So you can actually take this buy as you are going back up, but also having in mind that you are on a bigger range which the market is trading into. Now notice how it fails to take out the high there. All right, so it fails to take out the high, but instead takes out the low and forms a new low right there. Then it trades back into the range. So this range, then it gives you a short setup there. Then you push all the way down and form a new lower low. Now what happens next here? The market then takes out a high. All right, it takes out a high right there, and the market goes up and it forms a new higher high. So the question is, what direction is the market? The market at the moment is actually bullish, all right? But the market is bullish, but it is still within the bigger range, all right? The market is still within the bigger range. Until that range is taken out, we can then expect the market to continue going down. In terms of D1, that is still a range, all right? But in terms of 4 hour, the range has been taken out. Where was the range taken out? Let me show you, okay? Market formed a higher high, market formed a lower low, market went back into the range, formed a lower high, market formed a lower low, all right? Then market broke the last higher high. That is where the direction changed. But from the D1 time frame, this is still a big range. So the market is still trading within the range. That still even makes your market remain bearish. Okay, let me give you a different example so you can actually understand what I'm talking about. Right, like I said, you are analyzing, you don't understand where the market is going. This is how you need to actually analyze this. So I'm going to choose any pair. Maybe let's take maybe let's go to Carter Chief, the one that is ranging, so you can actually appreciate. I'm not going to do this because this is self-explanatory. You can see there not even a high or low was taken out. Okay, so you want to trade this and you want to understand which direction am I supposed to go. This is a ranging market. Definitely you're not supposed to trade this, but you wanted to take this sell right here, right? This sell that happened right here. Okay, I actually analyzed this pair and I got a sell out of it, which was really good, though I didn't trade it. But this being a sell, now how did I find out this was a sell? After every analysis, checking my levels and everything, I knew this was a sell. Now, an extra confirmation to this, the market was pushing up, and the last time the market pushed up, it formed a higher high, and here it formed a lower high. Then the market went up and formed a higher high. Maybe let me try and draw this so people may understand. Market rallied up, formed a higher high, came back down, formed a lower high, and then went up, formed a higher high. Then what did the market do? It came down and broke the higher high. So the market formed a lower low. All right, so this is a higher low. I keep confusing these terms. This is a higher low. All right, so the market formed a lower low. Now what did the market do? Came back in the range, gave you a setup, and then the market went short and broke the lower low. So where is this market gonna go? This market is still bearish. This market will come back into the range and still go short. The only way this market will be bullish is when this high gets taken out. As long as this high doesn't get taken out, then the market is still bearish. If the market then comes into the range, forms a low, breaks this one, comes back up and breaks that one, then only then the market will be bullish. Let me show you again. If the market comes into the range and then market comes back down, whether it fails to take out that low or it does take it out, and then market comes up, then the market is now bullish. All right, So at the moment, the market is bearish until a high that is, until this high or a high that is going to be formed gets taken out. All right, let's go to USD/JPY because this one is actually interesting. All right, now look at this one. So USD/JPY, you actually have a lower low. All right, you have a lower low. The market goes up and forms a higher high. All right, so at this point, the market is still not bullish. All right, the market is still bearish. Someone actually might have taken a trade there and sold all the way up to there. I remember some people during news when they actually sold USD/JPY, they did very well because the market was still bearish. All right, so this becomes our new higher low. All right, then the market quickly goes up and breaks that. Now that means the market is now bullish. You get the sense? Now the market is bullish. Then the market goes up, the market forms a higher high. All right, then the market comes back down and forms a higher low. Then the market goes up and forms a higher high. I'm just bungling these because they are actually the same high. Now notice how right here you're gonna have instances where the market slightly shows as if it's broken the low. All right, which is fairly fine. The market has done that. It simply means the market is now bearish. Okay, you can even respect that and say, oh yeah, the market is now bearish. It's still fine. Okay, now then the market reverses back into the range. So you are looking for a short signal, but you do not find the signal. Instead, the market takes out the highs. You are not in the market, you're watching. All right, the market takes out the highs, or you were actually selling. Okay, this is a 4-hour time frame, so that means you could have closed already, or you are still swinging. Then the market comes to your entry and takes you out. Fair enough, that's okay. All right, because you saw the setup from 1-hour time frame. But at the back of my mind, I'm still bullish. Keep that in mind. I'm still bullish, even though I have seen something that looks like we might have gone bearish. Because remember, I'm not going to enter a sell there. I'm going to wait for the market to trade inside the range, which in this case, it did not trade inside the range, but broke out the highs to confirm that we are still bullish. All right. So I couldn't trade that particular day. Now on the following day, then the market out of nowhere quickly falls down. Now this is because you can then analyze the D1 time frame. I'll show you what I mean by that. Okay, you can then analyze the D1 time frame and understand why the market fell down there. Okay, we'll get there. Now the market goes all the way down, takes out that low, so that means the market is now bearish. All right, the market is now bearish. So you can't trade, but you want to wait for the market to come back into the range, right? And which it did right here, okay? And it probably gave you a sell setup right there, right? And after giving you a sell setup, now this is a lower low. So after giving you a sell setup there, it probably took you out at break even or whatever. Because remember, you are selling there and you've got 1, 2, 3, 4 candles. That's like almost a whole day waiting, 16 hours of trading, the market being in profit. You're not going to be in a loss, but the market is in profit. Then you secure in break even and it comes and takes you out, which I'm going to explain why. All right, it comes and takes you out. Then the market pushes further above and breaks that high. So that means you now have a new higher high. So because you now have a new higher high, you are now looking for buy setups. What happens? The market trades back into the range, gives you a buy setup, and you take a buy. Look at that. Boom, you are in profit. All right. So on this day when there was news, you already know where news is gonna go. you already know where news is going to go because you're trading into the range of a bullish market. The market forms a new higher high. The market comes back into the range, gives you a lower high, sorry, a higher low. I keep making a mistake on this. Gives you a higher low, all right? And you take a buy again on this day, and the market pushes further high and forms a new higher high. Now, what does the market do? The market then comes back down into the range of that range, right? So you're only trading higher highs, lower highs range, okay? You want to know where the market is going. Now, the market comes back down, probably gives you another setup, and you take a buy. Now, you are expecting a new higher high. So you are not going to go out until the market takes out any of these lows. Only then the market will be bearish. Now, let's look at the confusion that happened here so I can show you what exactly happened. Now, you want to take your analysis into a further step, all right? So you go to the D1 time frame. So the D1 time frame will give you probably a bigger picture of where the market is actually going. So I'm not going to analyze all this because you already know what's going on. All right, now the market, the last time it formed a lower high, lower high, lower low, lower high, and lower low. All right, then the market went up and formed a lower high. Remember where we had that sell? That is exactly where this happened. All right, lower high. Then the market formed a higher low. And what did the market do? The market came up and took out this and has formed a new lower, sorry, a new higher high. Oh no, this is a higher high and forms a new higher high. So what are you expecting? You want to see the market trade back into the range, all right? So that means 4 hour is going to show you a bearish market for a very short time in order to facilitate the D1 time frame. So it's going to show you a bearish for a short time. So this is what you're going to see. The market trading back into the range. I didn't say it will reverse here. Probably it will finish its levels and then trade back into the range. So you're going to see a 4 hour printing lower highs and lower lows, and then give you a big setup which will be a higher low for D1 and then start the whole thing again. Now, this explains the confusion between market structure, substructures, and all those kind of things. So the reason why I started with the 4 hour time frame, I wanted to show you how sometimes it might have noise, but it is the best place for you to start from, and then you can move into the other time frames, and which are the D1 time frames, the W1 time frames, and actually continue from there. Now let's look at gold, all right? Because I know some people might wanna know what's happening to gold. So I'll switch to the D1 time frame. So if you look at the D1 time frame on gold, this is very interesting, all right? So for a very long time, gold has been on a bullish market. Now, how do we know that? Look at how gold made sure that he does not break any lows, okay? Gold made sure it does not break any lows. Everywhere where gold goes, he made sure it forms any lows. There is only one time, which is here, where gold decided to break the lows and then decided to form new highs and continue going up. Now, that is where you were probably gonna lose on this particular day, or that is where also, well, because this is D1, you are going to be able to make profit by selling. However, looking at it from the W1 time frame, there's a reason why this happened, which I'm not gonna explain it now, but you understand that probably the market was trying to get into the range of W1. All right, but the market printed higher lows here and also printed higher highs. Notice how the market made sure that everywhere where it goes, it only shows you higher highs until there was a failure swing right here. We had a lower high, a failure swing, and we also broke the last higher low. This is the daily time frame. Now, what do you expect? You then expect the market to trade back into the range. You expect the market to trade back into the range. And then from there, the market will give you a setup, whether it is the 4 hour or it is the 1 hour, and trade downwards, breaking the low. So at the moment, gold is bearish. I don't know if this makes sense. Let me try and zoom in a little bit so you can understand and appreciate market structure. All right. So at the moment, gold is bearish because it broke that low. All right. And it is actually trading back into this range. So now you want to look for shorts. It can only be bullish if it breaks this high. All right, this last lower high, or you can call it a higher high or whatever you want. That's when it can be bullish. Now you can then further take this to the 4 hour time frame and try and understand what exactly is happening from the 4 hour time frame. All right, now here we are on the 4 hour time frame. We want to understand what exactly is going on. Okay, so from the 4 hour time frame, as you can see, this is where the market actually broke the low, the higher low. This is where we have our higher high. All right, or you might want to make it the lower high, whatever you want. Now the market then formed a lower low and did not take out that lower low even here. It actually respected it. But this right here, to me, it is not a pullback. It's actually a pullback from the 1 hour time frame, but not from the 4 hour time frame, because that's just a single candle. So I can't come here and mark this a what? A lower high. I can't mark this a lower high because it's just one candle. Okay, maybe if it was 2 or 3 candles, I will understand. Same applies with this right here. I can't mark this as a higher low. I can't. I need to see an actual market pullback. Maybe something like this right here, where you've got so many candles sitting there for quite a while. That's when I can consider it, even though it's the same point. But I expect to see 3 or more candles actually pushing down. That's when I can tell that this is actually a pullback. So anything lower than that, I cannot accept as a pullback. So what then it means is we've got a range at the moment, and that range is a high and a low. So the market has traded back into the range. So we want to see the market give us a setup, then we can go bearish. So we do not accept the market to be bullish at the moment because there is no high or low that has been taken out. If the market does not give us a setup and continue to buy its way up, fair enough. But if the market gives us a setup, we are going to gladly take that setup. All right. Now, as you go lower to the time frames, you will find it becomes different each and every time. So you can find that here on the H1, you can actually clearly see the last high being taken out. So that means from here, that is where you were supposed to take your buy when the market traded back into the range. That's where you were supposed to take your buy and actually move up. So now what we want to see is, since the market has already started pulling back here, is it going to form a higher low? If the market does form a higher low right here, or maybe this candle closes there, and then the market starts to buy, all right? What we are expecting is to see whether the market is going to break that low or actually give us a sell setup, then we can go down. Now, I'm teaching you market structure, and I'm not saying throw away counting of levels, 3 pushes and all those kind of things. Not really. What I'm trying to show you is how you can actually take advantage of market structure knowledge to actually analyze the market. Sometimes it will help you not to burn out, because sometimes you burn out, reason being you are not really sure where the market is actually going. You're not really sure where the market is going, and the market keeps hammering you, all right? So that is where you lose it. Now look at this. You've got AUD/USD, all right? This is a daily chart on AUD/USD. As you can see, that's your lower low, all right? Now that's your higher low. That's a new higher low if it gets confirmed, right? That's a higher high, okay? Now that high there to me looks like it got taken out. So by getting taken out, it means this peak formation that formed here was going to be a very good chance for you to take the market. Now look at that right there. That becomes a higher high, all right? Now because you know this, then you know between this range and that range, you're looking for a bullish market. So you're not expecting a bearish market. And I'm not saying you can't trade this sell because I said you're supposed to wait for the market to come into the range. You are not really waiting, but you want to know what's the overall trend of the market, all right? So you can go to lower time frames and actually trade this sell, but trading with the mind that I'm in the range of D1, and that range is a bullish market. Now look at what's happening here. Then if you go down to the 4-hour time frame, right? Maybe let's first put some marks right here. So we put a line right there and put another line right there. So this is the range that you're trading in, and you expect a bullish market. Now you go to the 4-hour time frame, that is the range right there. So the market will be bearish on D1 if this low gets taken out. The market will be bullish on D1 because it is bullish, all right? And it will be even more bullish if that high gets taken out, okay? So you have that in mind. Now, you probably have got a peak formation at this point right here, right now. You probably have got a peak formation. So you want to understand where is it going to go. So the market, because it is bullish, so you're expecting buy setups. So next week, you're actually anticipating the market will buy, all right? Now, if you go down to the 1-hour time frame, it becomes a different story. What does that mean? From the 1-hour time frame, the most interesting part is that the market has taken out the last known high, lower high, all right? And has somehow respected the last lower low, okay, and is trading between this range. So that means you look for buy setup. So it's not like you just jump in the market. You wait and see if the market is gonna give you buy setups. That's the only way you can take them. Now then you'll appreciate why I took a sell on this particular day here. The reason why I took a sell is because I saw the market formed this, the market took that out, the market came into the range, the market sold, took that out as well, the market came into the range, and I took a sell. And then I waited for the market to start taking out lows as it's moving down. All right, guys, I hope this makes sense, and I hope this helps you out there. And thank you very much for watching this video, and please back test this and see if it works out for you. Let me know if you've got any questions in the comments. Cheers.